With so many worrisome economic headlines, you may be asking yourself, how can I protect my portfolio during volatile markets? Hi everyone, I'm Mark Fonville with Covenant Wealth Advisors, and today I'm going to talk about 3 ways to de-risk your portfolio for retirement. Markets go up and down in the short term, but have historically gone up over the very long term. That doesn't mean that positive rates of return are guaranteed, but it does mean that managing risk when markets decline is paramount to preserving wealth long term. Even though markets have historically delivered positive rates of return over the past several decades, many people still end up losing money with their investments, or they don't get the returns that are necessary to accomplish their goals. That's unfortunate, but the good news is that investment risk can be better managed for most people. Here are 3 ways to de-risk your portfolio for retirement. 1, avoid trying to outperform the market through the use of what are called actively managed investment managers. Evidence shows that these actively managed strategies generally don't do very well long term. Instead, consider selecting passively managed investments such as index mutual funds or exchange-traded funds that track an index or asset class. 2, make sure you have the right mix of stocks and fixed income investments in your portfolio. The key to having the right mix is to understand what rate of return you need on your portfolio in order to achieve your goals, and also understanding how much you can tolerate your investment portfolio declining temporarily when markets fall. For example, let's assume Michael needs to achieve a 4% rate of return on his portfolio to avoid running out of money in retirement. It may not make sense for Michael to own 90% stocks in his portfolio. Instead, in this hypothetical example, a portfolio that has less exposure towards stocks, perhaps 50 or 60% of the portfolio, may be more suitable and allow him to sleep better at night. But everyone is different, which is why we always advise to seek professional counsel to help guide you. 3, make sure your portfolio is well diversified. I've been helping individuals invest for nearly 20 years, and one of the biggest issues I encounter with investors who have over $1 million in savings and investments is the lack of adequate diversification. While proper diversification doesn't guarantee against a loss, what it does do is reduce the exposure to any single company or bond in the event that the investment doesn't do well or even goes bankrupt. It happens all the time. Remember Enron, for example? When it comes to proper diversification, ask yourself the following questions. Do I own enough investment positions? We advise our clients to have in excess of 10,000 stocks and bond positions through multiple well-diversified mutual fund or index funds. Do I have too much exposure to a particular industry, such as technology or financials? We talk to a lot of people who have too much exposure to single stocks like Apple, Google, Facebook, and other big companies. The problem is that no single company remains great forever, and having a large portion of your portfolio invested in a single sector like technology can result in devastating consequences. Am I properly diversified across both US and non-US stock and bond markets? We often find that investors have too much money stashed away in US companies. When US stocks do poorly, as they did from the year 2000 to 2009, the financial security of your portfolio may be at risk by not having exposure to other countries' stock markets. In conclusion, while nothing is guaranteed, we believe that stock and bond markets work long term. Unfortunately, many investors don't implement the necessary actions to help avoid permanent losses in their portfolio when markets fall. As a result, you may end up permanently losing money, increasing your risk, or failing to achieve better rates of return over the long term. The 3 simple steps I just outlined may help de-risk your portfolio and help better align your investments with your goals. This isn't advice, just a few simple strategies that we believe every investor should consider. At Covenant Wealth Advisors, our financial advisors have decades of combined experience building and managing risk-managed portfolios up to and through retirement. If you would like our help managing a portfolio for you, give us a call at 888-320-7400 or contact us through our website at covenantwealthadvisors.com. Thanks so much.